Hi guys, there is a lot of talks about inflation and I have actually made few posts on my blog about it, and I decided to make a deeper research this weekend. So I found out that recent rise in prices is actually not because of inflation, it's more because of shortage of supply. So it has nothing to do with inflation, and I believe that it's somewhat like empty fears at the moment. So to go further, you can go to Federal Reserve website and check key economic indicators like unemployment data. You see that it still suggests that economy is doing not bad, and you can check out also economic stress indicator, which is also positive still. So, with all that in mind, I believe that we are still in a bull market and there is no sense to look for and wait for some crisis to happen or something like that. We may see some pullback and we will look at the charts later to find out some opportunities, but overall, it's still a bull market and all the key economic indicators are still very positive, at least as for now. Maybe situation will change in coming weeks, but for that reason we can double check each week the key economic indicators on Federal Reserve website. So now let's pay attention to charts, and it's a daily chart of SP 500, and we have a major consolidation zone here. So the main consolidation zone is right here, and we are very close to upper range of resistance, and I'm using gun levels to identify the resistance zone. Well, you know that resistance and support are usually not the exact number in most cases, and especially when it comes to swing trading, it's some range. So this resistance is a range between 42.30 and 42.50. Well, I will do this. Okay, let it be 56. So you can see that we are very close to upper range, but based on the cycles, it's not a good time actually to look for breakout points. So I believe that likely we will see more consolidation here, or maybe some pullback to moving average 50 in coming weeks. And only after that, somewhat like at the end of June or beginning of July, we can see finally a breakout of this resistance and rally to new highs. But this is all based on the cycles, and the other tools I am using are giving just a mixed signals. So I'm not quite well confident in this forecast, and taking into account the data from Federal Reserve, it makes me believe that more likely we will see this scenario with more consolidation here over here and then rally, or maybe some kind of consolidation, the retest of upper range above 32.50, and then potentially a pullback to moving average 50 or something like that, and then new attempt. But it's just a general idea, and we have to pay close attention to price action near this resistance, because it will decide everything actually. When the tools are given somewhat mixed signals, but the key economic indicators are very strong, we will likely see trend continuation in this market. But we are swing traders, and some of you are actually day traders. So we have to identify the best opportunities and to catch the main part of the coming rally or decline. We will never get absolute top or absolute bottom in this market. Just forget about it. It's just the dreams. So basically for day trading, actually very good indicators is gun levels and also cycles, and you can use those on 15-minute chart, and it works not bad, not always, because when the price action is like this recent few sessions, it's somewhat too tight range and too choppy, actually, very tight range, and sometimes it's not even enough to reach from one gun level to the next gun level. But anyway, you know that the longer it consolidates, the more aggressive breakout will happen after that. So, with all that in mind, can carefully watching and looking for longs at the end of this month, and before that, maybe we will make some profits on the sell side. But still, it's just a general idea, and let's see how the price action behaves near mentioned resistance range. And also, another market I would like to watch today is British pound futures. Why these futures? Because of central bank policy, and I believe there are some fundamental reasons for this market to rally. Maybe not here, not right now, but anyway, let's see what we have here. We have one swing point right here, and another one if we have it. Well, actually, it's not clear. It's not what I called qualified trend line, but maybe in a few days we will get one. Potentially it will be right here, but anyway, we need a bit more price action, a bit, I don't know, maybe something like 3 or 4 days more to confirm that this trend line can be qualified. And then if we will see a breakout above this trend line, that will be good signal to go long. And you know that I have a rules for qualified entry as well. So we need a down close day, like here we had on Friday before breakout day. But before that happens, pay attention. We have to get another swing failure, a clear swing failure like this one. And that two swing failures have to create a descending line. And qualified breakup above this trend line will be an entry in this market. Well, the targets in that case, I think that the realistic target is a retest of this previous swing failure, which is around 1.4250. And depending on fundamentals we will have at that moment, and if it breaks out, the final target can be 1.44, which is right here. It's quite significant rally if that happens. So I want to add this market to my watch list. I'm not jumping into British pound futures right now, but it's something I want to watch, and potentially I will go long in this market if it meets the requirements on qualified entry. And this is it for me because based on all the tools I'm using, also it's somewhat mixed. But based on the not Federal Reserve, but Bank of England policy, I believe there is a chance for rally in this market. So, guys, this is it. Let me know what do you think. What do you think about S&P 500 and British pound futures? It will be very interesting to read in comments. And I will catch you next time on Trading TV. Wishing you great and profitable week. Bye.